Go across to the management at Chalet Hotels now. They declared their numbers earlier yesterday. The management is now with us, Mr. Sanjay Sethi. Sir, thank you so much for taking out time for us. Could you first start by talking to us about the quarter? It's a quarter that you would want to forget. And more importantly, now that things have started to open up, how are things, how are pent-up demand coming in?
So, Pankaj, thank you for having me and good afternoon. No, I don't think it's a quarter we'd like to forget at all. Every quarter in the last 6 quarters has taught us something. I would like to keep the learnings very much within the framework of our strategy. Last quarter was significantly better than the quarter one, and we'll give you the numbers in a bit. But I think what's important is that we're witnessing month-on-month improvements in the hospitality segment of the business. Over the last 6 quarters, we have streamlined our business, remobilized dormant assets, and executed pivots on underperforming ones. In addition, we had significant value to be unlocked from our existing balance sheet. Coming to the quarter two, our consolidated revenue in quarter two was up 84% to 1.4 billion rupees, and EBITDA, which was negative in quarter one at 31 million, has now turned positive at 433 million INR. So it's a quarter that's done well, and I think the month-on-month improvement that we see, including in the month of October, is extremely encouraging.
So right, there was a lot of learning that you picked up. Now that things are opening up, have prices gone up? How will you maintain the sort of one-off losses that were there in the previous few quarters?
So we've already seen a fair amount of catch-up in quarter two. Going forward, H2 looks more encouraging with business travel creeping back. The new segments that got created in the last 6 quarters continue to contribute. And very importantly, the wedding season starting, we see a huge amount of traction happening in the hospitality business. And we must also not forget that till middle of August, Mumbai or Maharashtra as a whole had restricted F&B timings to 4 p.m. It's only in mid-August that it got relaxed to 10 p.m. to begin with, and then in the recent 1 week or so up to midnight. And that bodes extremely well right now, given that the season and the festivities are starting right from now, Diwali onwards, right into Christmas and New Year's. So we're excited about that. Banquet booking, especially wedding season, is kicking off very strong. So we're looking forward to the decent H2 for us.
Good afternoon, Mr. Sethi. This is Cheryl also joining in the conversation. You're saying that you're likely to see a decent H2, but if you could put a number to that, if in the month of October your occupancy level month to date was at about 59%. Now we, like you mentioned about the festive season, the year end with Christmas, New Year as well. How much of an improvement do you expect to see in this particular number, given the booking trends that you're witnessing now? Because like you said, restrictions are being eased. People are going out quite a lot more.
So I won't be able to give you numbers because that would be giving forward-looking numbers. But suffice it to say that we're seeing month-on-month improvements on our room business, and we are seeing pretty strong step-ups in the F&B business right now. Our rates, for example, between September and October are up already 11%, and September was already better than August. So we, as I said, month-on-month improvements, and in the next 3 or 4 quarters, we expect to be back to 2019 numbers.
All right. Shifting focus now, how are you actually witnessing growth when it comes to your rental as well as commercial portfolios? How much of your rental space is occupied currently?
So our active space that we have is the space at the Sahar property in Mumbai, where one building of roughly around a little under 400,000 square feet is fully occupied. We have repurposed the Orb asset, which was F&B retail, into office asset. And out of that, where we've just done that very recently, so 25% of the space is already signed and registered as a leave and license agreement. The tenants are doing fit outs and they'll start moving in by, one of them will start moving in by end of November. And the rest of the space will be leased out over the next 2 quarters. In addition to that, we've got office spaces in Bengaluru at the Whitefield location, where we were building a tower of roughly around 450,000 square feet, which has now been increased to 660,000 square foot of leasable space by adding 2 more floors within the space that we had available. So that's not completed. It's expected to be completed in end of Q4 this year, and the leasing activity is underway right now. We should have tenants in place in the near future there. In addition to that, we've done a quick pivot on the in-orbit mall in Bengaluru because the mall business was just not taking off, and that mall had been underperforming. And over this period, as I said, we've repurposed assets into what is more, into what makes more sense. So the in-orbit mall, which is roughly around 300,000 square feet, is also getting repurposed into an office asset, and we have significant interest in that office asset. But there's some work to be done on the site before it is ready for leasing. But ready assets, 90% of them are occupied right now.
All right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective.